It's Friday, but let's do business before we get into the weekend. Welcome to 25 minutes of doing business around the world. That's what we do here on Business Incorporated. I'm Ini John Mekwa, and for this episode of the program, we can tell you that there are so many things happening on the continent, beginning, of course, from Ethiopia, where the country is planning to build a nuclear plant, and they're doing it in collaboration with Russia. In Egypt, it's not so good because their oil and gas output has reduced, and we'll give you the details of that and a whole lot more on the program today. Now let's get to the details and starts from what's happening with the oil space. We told you earlier today how we saw green numbers or green color when it comes to oil, but by this time there's been a drop and a change in that color, so it's still at 69, but you noticed earlier we had 55 cents there, but now it's $69.33. It dropped 0.13%. WTI, it's also down $64.86 after dropping 0.18%. And major driver of this is the war going on between Russia and Ukraine. And we know that Ukraine has been targeting energy assets of Russia in recent times, and that has driven that down. And talking about Egypt, the crude oil and condensate fell to just 486,000 barrels per day in July. This is according to the latest numbers from the Joint Oil Data Initiative. And this is the first time that production has come in below 500,000 barrels per day since late 1970, and compares to a decade ago levels of 700,000 barrels. Egypt is facing declining domestic natural gas production, particularly from the Zohr field, leading to an increased reliance on import and a more challenging energy landscape. To compensate, the country is investing in new exploration projects, optimizing liquefaction terminals and building pipelines from the Eastern Mediterranean, including Israel. Outside oil and gas, gold held steady on Friday after better than expected U.S. GDP data dampened bets of further U.S. rate cuts, while investors are awaiting key inflation data that's expected later on today. Spot gold will see it is holding its ground at $3,748 per ounce level, and the metal has climbed almost 2% this week and hit a record high of $3,790.82 on Tuesday. U.S. gold futures for December delivery rose 0.2% to $3,779.40. On the trade front, President Trump has announced that fresh round of tariffs on imported drugs, trucks, and furniture starting the first day of October, among other metals. Then looking at the other ones, we see spot silver is down 0.5% to $45.01. Platinum is up 0.6% to $1,539.44 to hover near 12-year high, and palladium was steady at $1,250.40, and all three are headed for a weekly gain. Let's go to Kenya now, where the Private Sector Alliance has urged the United States to renew the African Growth and Opportunities Act, that's AGOA, for 16 years, warning that failure to do so could destabilize jobs and investment flows in both countries and not just in Africa. Speaking at the Kenya-U.S. Investment Forum in New York, CAPSA CEO Carlo Karuki says that if renewal is not secured, Washington should grant Kenya a 2-year transition window to negotiate a bilateral trade deal. And we'll see what the response of the United States would be, because AGOA has supported businesses, created jobs, and transformed lives, according to the observation of Kenya. We're still in Kenya. California and Kenya are joining in a historic partnership to curb emissions and boost trade. Governor Gavin Newsom has announced a new partnership between California and Kenya to advance efforts to cut pollution and support trade. The governor led California's delegation in a bilateral meeting with the delegation from Kenya that was led by President William Ruto. California and Kenya signed a memorandum of understanding at Climate Week in New York, and today the announcement builds on partnership that was announced on Tuesday. All of this happening on the sidelines of UNGA in New York. Russia and Ethiopia have signed a document calling for the planning and construction of a nuclear power plant in the East African country. And the state-owned Russian Nuclear Corporation revealed this, saying that there's an action plan on development and construction of the facility that was signed during a nuclear power forum by the General Director of Rosatom and the CEO of Ethiopian Electric Company. Both countries are coming together to build a nuclear plant in Ethiopia. Well, one of the consequences of issues around trade tariffs, we had a new one from President Donald Trump today. It's supposed to come into effect from October the 1st. Is, of course, global shipping and global trade. Now, UNCTAD, United Nations Trade and Development, they have a review. They've shared a review of some of those consequences captured in numbers. So I'll just give you a background to the report or the review that they have shared. It was released earlier this week. They said that global shipping has which moves about 80% of the world's merchandise trade, is entering into a period of fragile growth. There's rising costs, mounting uncertainty, and according to the United Nations Trade and Development, other findings include the Suez Canal operates below normal capacity. It's now operating at around 70% below average tonnage transit levels that was recorded in 2023. They also say that maritime trade now travels significantly longer distances, an average voyage haul having increased from 4,831 miles in 2018 to 5,245 miles last year, 2024. Shipping greenhouse gas emission went up 5% last year. Only 8% of the world fleet's tonnage is equipped to use alternative fuels, and ship recycling rates remain low. Security concern is also major in that they say that security concern is redrawing the map of global shipping, and of course that comes with other costs. Now let's have this conversation with the chief of the Trade Logistics Branch in UNCTAD, Ms. Regina Asaritos, joins us from Geneva. Hi Regina, good afternoon and welcome to the program.
Good afternoon. Thank you very much for having me.
Great. So you've stated out in your report some of the consequences and the reason why you arrived at the conclusion that there's a threat to global shipping. Do we have a cost to the loss or the losses so far?
I'm not sure. I acoustically heard the question.
Okay, well, can you hear me now? Can you hear me, Regina? Can you hear me?
I can't hear you well. I'm sorry.
Oh, that's so sad. I think that we should go to the market, for instance, and then try and fix that with Regina. I wonder what could have gone wrong. In just a couple of minutes, I did talk to her before coming on air. So I do hope that we can try and fix that. Meanwhile, while we wait for that to be fixed with Regina so she can hear us and we can hear her, let's go to what's going on with the markets. Hi, Regina, can you hear me now?
A little better, thank you.
Okay. Thank God for that. So I was asking if UNCTAD has been able to place a cost to the losses, that we've recorded in the maritime industry following this new rerouting, which takes longer time, gas emission, which has increased, and all of that.
Thank you for the question. It's not an easy thing to just allocate a cost or to identify a cost, because it depends on the cost for whom and the cost in which terms. So obviously the uncertainty, which is really the key message at the moment, or the key theme at the global level, that is not very conducive either to investment decision, to consumption. So everything is slowing down. There's uncertainty, lack of stability, which affects all movements. And the volatility translates also into higher costs, which is, again, a problem for the consumers and users of shipping services. So in terms of overall costs, we know that emissions have been going up, and you have mentioned that. That is true both in shipping and unfortunately elsewhere, and that is a global problem. But again, how can the costs be measured? It's very, very difficult to say. So I would like to bring it onto, if I may answer it like this, I would bring it to the question, what is paying off in the long term? And for example, emissions control is certainly an investment for the future. So this year we have seen emissions coming down a little bit in response to, for example, front loading in advance of the tariff measures entering into effect. But what happens with emissions will depend in part on policymakers' decisions, in part on regulatory development, technological development, and the uptake and the infrastructure that has to be in place. So in terms of costs for whom and what type of costs, that is a question. So I would like not to put a figure on that.
But I know, I think I heard you say that emissions have started dropping, but last year we saw it increase. I wonder what this is doing to the climate change conversation, which is a global one.
Please repeat. Sorry, I didn't hear.
The impact on a climate change conversation, the issue of emissions increasing or decreasing.
The climate change conversation. The climate change conversation has two sides. So there is the emissions, and we know global shipping emits about 3% of anthropogenic emissions. And that doesn't sound a lot, but it is, because it's roughly the same as a country like Germany. And we know the trend is going generally up in line with demand, because shipping is a derived demand. But we need to reduce emissions, and that is very important. But at the same time, we also must remember the flip side of the coin, and we need to address the impacts that the changing climate has on the ground. And there are particular problems for transport links, critical transport links like ports and hinterland transport. So in Africa, for example, where you have many landlocked developing countries and least developed countries that depend both on well-functioning ports and on well-functioning transport links generally, corridor transport, is critical that the increasing vulnerability to the impacts of extreme weather and climate change is being addressed. And that needs a lot of investment, and it needs a lot of policy choices. So the climate change conversation is affected by all of this. There are very encouraging signs. The IMO, the International Maritime Organization, the main regulator for international shipping, is considering for adoption a framework to advance the strategic objective of bringing global shipping down to net zero on or around 2050. And this could be an important step. It would introduce a global carbon fuel standard, an emissions pricing system, and a fund to reinvest any amounts generated, any funds generated, in particular with a view to those most at need, and to build up the infrastructure, for example, for a just transition. But we don't know if this will be adopted. So it depends. It's part of the uncertainty that we don't know whether this will be adopted. A special session at the International Maritime Organization will consider this in October. So the general future is marked somewhat by uncertainty. But let me just turn this also into a positive, because there are also huge opportunities. So decarbonization, energy efficiency, and investment in renewables, there's a huge potential in Africa, is having a lot of co-benefits, because it reduces emissions, which is very important for everyone, but it also increases energy security. It reduces reliance on fluctuating energy price. It reduces costs for energy. And it has huge potential for this to improve the cost basis for adaptation as well, because that will again require a lot of energy. For example, in response to increasing extreme heat, which is again a huge problem in particular for subtropical areas. So there are many things to say. I'll leave it here for the moment.
All right. Thank you so much, Regina, for bringing those highlights and suggestions from UNCTAD. And as you said, wonder when world leaders would adopt some of those. I will be looking forward to that and following up on the story. The chief of a trade logistics branch at UNCTAD, Regina Sariotis, thank you for your time on the program.
Thank you very much.
All right, now let's head to the markets and see what's happening. Of course, starting for Nigeria, as usual, we see a green color is what we have this afternoon. It's 141,000 and 402,000. That's what we have. And after it went up 0.17%. For Johannesburg, it's also green, 0.08%. And at intraday, Egypt is not it's not working today. They don't trade today, so we don't have that numbers, but they closed in the green as well as Thursday's number for the Nairobi Stock Exchange. So now we're heading to Abuja. That's for our DSTV viewers. Now there's a construction of road happening right there, but that's for our DSTV viewers. For other platform, if you view from other platforms, please stay with us here on Business Incorporated. Okay, so look at other markets now. In the Middle East, Dubai at intraday is green, 0.30%, 5,833.74. Abu Dhabi is also green at intraday. The other two markets in this region do not operate on Friday, closed in the red for both of them, Tadawul and Qatar. And looking at other markets apart from the Middle East, there you have the United States. These are features just before the ringing of the bell, the opening market. We have the features where the Dow Jones is green, the S&P is red, NASDAQ is in the red also. Now let's get some of the details of yesterday's trade, that's Thursday's trade in the United States. We have our correspondent Maria Bird with that.
U.S. stock market fell on Thursday as the Dow Jones was down at 0.4%, the S&P 500 down at 0.5%, and the heavy tech Nasdaq was also down at 0.5%. As many investors are a bit concerned about the Federal Reserve policies that could be pending, as they are watching to see how the Federal Reserve will respond to the economy. Most recently, jobless claims were unexpectedly high. This could have an impact on the U.S. market in the days and weeks ahead.
Yes, of course, and especially with the new announcement by President Trump. We'll see how that will affect the markets and the products affected in that sector, especially pharmaceuticals and all. In Asia, we see it's mostly red close. This market is closed at this time due to time difference. The Nikkei closed in the red, almost 1%. Kospi is worse than that, 2.45%, and the Hang Seng, 1.25% in the red at the close of trade. Shanghai, Nifty of India, all of them in the red today. I don't think the market has recovered after Jerome Powell's speech, after that rate cut. And so we see that reaction linger right there. But let's see if in Europe they have recovered, or the markets there has recovered from all of the red color. We have Lars Holter joining us for that. Hi, Lars. Welcome to the program. Good afternoon. What's happening with the markets there?
Yeah, hi, Ini. Good to be with you. Markets up right now here, the DAX, but it still is a little bit down for the week, and it's really not leaving its trading range as it has been for a week. But Trump in the United States woke up this morning feeling a little tariffy again, and I think you just mentioned it with regards to pharmaceuticals. Trump saying he's putting higher tariffs on trucks. That's putting some pressure on shares of Daimler trucks in the DAX here in Frankfurt. And then, of course, there's going to be that tariff on pharmaceuticals. Now, that's a big one for Germany, Ini. Germany's pharmaceuticals depend on the United States as a market even more than automakers and engineering companies do. So this latest news out of Washington is once again about how trade will get more difficult. It's taking a little bit of a toll Although, like I just said, the DAX is taking it somewhat in stride and is actually currently up.
Yeah, well, it seems President Trump has given us enough rest and calmness, so it's time to wake up again and follow whatever he says and all. But I mean, other than that, this will be a problem over the resources. China limiting export of important materials to the United States and Europe. What have you heard about this?
Yeah, well, Ini, from a German perspective, I got to tell you that latest problem sounds almost ironic because we're talking about the chemical element with the atomic number 32 on the periodic table, and that's called germanium. So one might think that Germany, of all places, has a lot of it. But you'd be wrong. Germanium was first discovered in Germany, but the big deposits are actually in China, with that country making up around 83% of world production. Now, much of that has been exported for decades, mostly to the United States and to Europe. But China has now cut down on these exports, sending only small amounts of germanium to Europe and nothing at all to the United States. That is a direct response to tariffs and other trade obstacles that the Trump administration has put on China. And, you know, while most people might not be aware of germanium, it is crucial for parts of chip production as well as the production of fiberglass cables. And it also has military uses, including the production of night vision goggles, telescopic sights. It's in satellite imaging hardware and drone cameras.
So have we had reaction from the US or Europe, or how they intend to follow this?
Yeah, Ini, that's a great question. What are they doing now? The US has actually built up a bit of a reserve, but Europe hasn't. In fact, right now, Europe would need about the amount of 1 year's global production to be at a level that would secure business as usual. Now, in the short run, they're trying to buy up germanium from non-Chinese sources, but that won't get them very far because there simply is not enough of it available. And it's also actually expensive. Another solution is recycling. The EU already has its Critical Raw Materials Act on the books that states that by 2030, a full quarter of critical resources will have to be sourced from recycled materials. So like taking the germanium out of old night vision goggles. But while a quarter is a good start, it doesn't really cover most of the demand, obviously. And experts are saying Europe still has a long way to go to even get to that rather modest goal. So right now, Europe is scrambling to find a solution. Market insiders are already saying there is panic buying. So there's quite some desperation in sourcing this very important element.
Yeah, Lars, it seems that the world has no peace these days. There's always one thing or the other that we have to pursue. But thank you so much for giving us updates on that, Lars, and do have a great weekend.
And you too, Ini. Thank you.
All right, let's see what's happening in the crypto space. I think one of the biggest stories coming from the crypto space is what's happening in Swiss Bank. But first, let's see the numbers. We've seen BTC, and there are some beliefs that BTC is heading for a crash. I don't know what a crash would mean or what number would define a crash. I think this year we saw Bitcoin at about $60,000. So we see it now 109. We've seen the highest so far with about 124,000. So I wonder what that crash is. If you check online, you see a lot of comments and fears on that. But this is what we have for Bitcoin at this time, 109,533.62. In about 24 hours, it's been down 1.88%. Ethereum is also down more than 1%. Losing the $4,000 level. BNB, Solana, it's a red Friday, actually. It's a red Friday, and time will tell if that fear or uncertainty that's hanging around Bitcoin is going to come to pass. But in spite of this, we see Swiss Bank say that they will now allow clients to pledge Bitcoin and Ethereum as collateral for loans. Of course, this marks a new step in its digital asset strategy. The policy follows the bank's addition of crypto trading and custody services in May. According to news reports around the country, this is the first Swiss bank to extend crypto into lending business. So you can imagine Swiss Bank allowing Bitcoin and Ethereum as collaterals. That, of course, increases the value but we don't know when that will translate into the color and the price in the market. Away from Swiss bank, we see KuCoin is appealing 14.5 million fine from Canadian regulator over alleged violations. So KuCoin, crypto exchange, has taken the legal penalty imposed by the Canadian regulator, arguing that the decision is unfair and excessive. The amount is $14.5 million. The case stems from a $19 million, that's a Canadian dollar, fine that was levied by the Financial Transactions and Reports Analyzing Center of Canada, that the regulator claims that KuCoin repeatedly ignored mandatory reporting requirements designed to detect and prevent money laundering and terrorist financing. According to FinTrack, KuCoin failed to register as a money services business in Canada, which is a basic requirement for platforms facilitating crypto transactions in that country. And Bitcoin loses. So another reason why there's that speculation about a crash in Bitcoin. Bitcoin's latest slide has not only rattled traders, but also reshaped its wealth distribution as a breathtaking space. I think bold research drawing on data acquired from some other platforms, verified through the Wayback Machine web archive tool, shows that between September 2022 and September 22, I beg your pardon, that's about the beginning of this week, and today, the 26th, the network shared 7.6 millionaires' addresses and 1,116 wallet Bitcoin millionaires wiped out every day on the average. Ladi has to confirm this, but that's the research that they're sharing with us. Another reason why we see a fear around Bitcoin and talks of crash around that. So I'm sure Ladi will follow up on this next week. Hopefully we would see that. But that's it on the program, Business Incorporated. Thank you so much for being a part of this journey, the 25 minutes journey that we have done today. We promise to start again next week, Monday, with Business Morning and Business Incorporated. And our aim is always to keep you abreast of what's happening in the world of business, especially to affect your money. So you need to know. I'm Ini John Mekwa. I'll see you tonight for the Stock Market Report.